All right, are we live?
I don't know. Let me check. Yep,
All
on
right,
X
we're
at
live.
least.
Welcome back to the weekly where we recap the biggest stories in the Bitcoin and cryptoverse. I'm Graham Stone, joined by David Sencil, and this week, one of the more uncomfortable conversations in Bitcoin is back. Quantum computing. So, I mean, it's not because quantum computing can break Bitcoin today, it can't, but because the timeline to prepare may already be shorter than we think. So, yeah, Bitcoin security relies on something called elliptic curve cryptography, which is theoretically breakable by future quantum machines. Experts disagree on when that happens. Estimates range from late 2020s to mid 2030s, but most do agree, or at least many do agree, that upgrading Bitcoin itself could take just as long. So that's why some analysts are warning that we've entered what they call a quantum event horizon, where the risk and the prep timeline now overlap. The real issue, I'm told, isn't math, it's governance and whether Bitcoin can coordinate change before urgency turns into panic. So this was sparked a little bit by definitely by Nick Carter, a longtime Bitcoin uh, bull cheerleader, uh,
Supporter.
supporter, venture capitalist in the space. And there was also a story this week from uh, Charles Edwards, founder of Capriol Investments, and he also claims that the quantum threat against Bitcoin is growing every day. Now,
Yeah. So
yeah,
just
go ahead.
just to reiterate, Graham, something that you said a couple times in that intro, but it's important that we kind of frame this conversation around this. We aren't saying that this is happening today, right? There is no quantum computer today that we know of that anyone thinks can break Bitcoin. So we're not trying to be sensationalists. This is something that is going to be on the horizon, but it is not happening today.
Yes, exactly. And what these analysts like Nick Carter and Charles Edwards are pointing out is that the thing is, Bitcoin can't just like flip a switch to become post quantum resistant. The way Bitcoin governance works, it could take a long time for that to happen, like as long as 5 to 10 years. And waiting until the real threat is already here is actually too late. We need to start the governance process now.
Right. Uh, Bitcoin upgrades are slow on purpose. That's usually a feature for Bitcoin, not a bug. Although it's arguable that the upgrade kind of path has gotten more and more difficult over time, and this kind of ossification issue has gotten worse.
Yeah, and the slowness of upgrading Bitcoin, again, this is long seen as a feature, but when it comes to upgrading to protect the cryptography at the core of the system, it's even more existential.
Right, and that's kind of I guess the scary part, the really tricky part. Not all of the Bitcoin is equally safe.
Yeah, exactly. So there's millions of Bitcoins sitting in address types where the public key is already exposed, and when the public key is already exposed, that's the Bitcoin that is the most vulnerable to quantum computing advances. So yeah, some of the biggest stashes of Bitcoin, like the Satoshi era coins, those are in public keys, I believe, where or those are in addresses where the public key is exposed. Could be wrong on that one, but um, the thing is with those, you can't you can't like request them to be upgraded because what would have to happen here is that everyone would have to manually move to a new system, and if you've got these like Satoshi era coins that have never moved, they can't. So something would have to be done with those.
Right, and this is the ugly question, the kind of a question that will kind of shape how Bitcoin goes going forward. Because if these coins can't be upgraded, your choices are to kind of break the well, you can't freeze them. Do you let quantum attackers take them? All bad options, right?
Yes, exactly. And Bitcoiners have long sort of loved to hate what Ethereum did in the DAO incident, where they basically rolled back the chain. And the Bitcoiners have always pointed out that that would never happen with Bitcoin. And with so yeah, the question is like, do you like effectively confiscate or freeze Satoshi's coins to prevent a quantum attacker from taking them, thereby sort of violating one of the strongest principles of Bitcoin, which is like yeah, inalienable your inalienable rights to what's written on the blockchain.
Yeah, exactly. Um, Another point that Nick Carter addresses here is that this quantum breakthrough, while it's not here now, it's not going to be announced when it happens. So there's not going to be kind of some pre-warning or press release. It's just going to happen.
Yeah, exactly. And let's say someone did have the capability, right? They could start picking off addresses, small addresses. You wouldn't start with the Satoshi era ones because that would uh, cause panic, and therefore you'd lose the value that you're hoping to extract. Instead, you might just like pick off a few smaller addresses. That person who suddenly lost their Bitcoin, they could, the people might be like, well, what happened? I don't know. You must have like interacted with your security, your OPSEC is off, right? So you could uh, sort of get away with it by blaming the user, like it's their fault, not the quantum attack.
Yeah. Right. Overall, the thing that I took away from this is that Carter and company were saying it's not about panicking now or doing some rash actions. It's to start to calmly prepare for this inevitability. But we need to start right now.
Yeah. There's one other thing that I think, at least I've heard, is that so a lot of people say, like, well, if Bitcoin becomes vulnerable to quantum computing attacks, then what about the rest of like the financial world? All the banks and everyone's like yeah, PayPal balances, they're all going to be hacked too. And so like those will be the first target. But I think what Nick Carter points out and others is that no, actually, those systems won't be the first target, or it'll be easier for those systems to upgrade to post quantum cryptography because they're centralized. It's just like a flip of the switch thing. While the real problem, right, is Bitcoin with its very slow sort of glacial consensus needed to actually make any changes.
Yeah, I mean, there's so many kind of facets to this. I listened to a podcast recently from someone who was actually poking holes in this idea a little bit, where like AWS and Cloudflare, they'll be okay, but a lot of people who are like uh, vendors, they don't really know what they don't really know anyone who's in their stack. They can't kind of dig in and see where or who has quantum vulnerabilities and if they've um, hardened their tech for it. And so that yeah, Cloudflare, AWS might be okay, but actually a lot of the modern blockchains like Ethereum, Solana will be much better off than even a lot of Web two tech stacks. Like so, for example, let's say you're I don't know Charles Schwab's app, right? They have a mobile app. They probably just use a ton of vendors, right, for their whole stack. They don't keep that all in house. Are they doing a good job of checking to make sure each of those vendors have quantum resistance, and then those vendors who use vendors, are they checking those, and then those vendors that use vendors, and on and on and on you go. So
Yeah.
um,
Interesting
it's a
nuance.
yeah, it's an interesting thing. So some of these people were saying that like Bitcoin has obviously, like we talked about, a lot of challenges, but also a lot of these Web two just kind of off the shelf apps could have difficulties with this. But one other key point, Graham, I'd like to say is for me the biggest part of this story was not Carter and this other gentleman who've been talking about this, along with several others. It's been the reaction, and you've seen this over the weekend. There's been this like vociferous kind of personal attacks coming towards Carter and company, and they're not really, I feel like, engaging with the ideas. They're doing things like saying things like, oh well, Nick Carter's was it Castle Island Ventures, the VC firm of Carter's. They've invested in some quantum resistant or quantum computing startups.
So
Oh,
Nick Carter's
gee.
talking his bags here, basically,
Yeah,
is the
yeah, yeah, yeah,
accusation.
yeah. And so, again, not engaging with the actual ideas of his like 13,000 word, um, what essay on quantum. So I find a lot of these Bitcoiners to be like, I think Adam Back, for example, he replied to Nick Carter, and it was just like it felt pretty disingenuous, and it actually makes me more worried about like Bitcoin than anything else, to be honest.
Yeah, there's one comment in the, at least my thread feed. Uh, Ali Shirap says, getting scared not seeing any major Bitcoin devs in replies or quotes. And then Nick Carter replies, as I said in the article, culture of silence and unwillingness to recognize existence of existential threats. Not to mention they don't like to take cues from non-technical outsiders such as myself. Very
Yeah,
insular culture.
yeah. Um, Nick Carter posted. He had a post on X that was just kind of reflecting on the reaction that he's gotten from some of the biggest Bitcoiners in the space, and in the replies to that, Hasu, right, of the uh, Ethereum fame, right?
Yeah.
He was on a great podcast before. Um, he actually replied and said, "You know what? I've had the same experience trying to like talk with Bitcoiners about the security budget in the past couple of weeks." And Carter replied, "He's like, oh yeah, I saw you going through that. That didn't look fun." So I mean, it just I read stuff like that, and I feel like these guys are good actors, and they have the best intentions. And then to see them have similar experiences and not just about quantum, right? Like it just feels, it makes me feel more worried about like Bitcoin and how they're going to address some of these large issues. Like I've been talking about the security
Yes.
budget for a long time, and so it's like, come on.
Yeah. So it seems that if you had to choose between security budget and quantum threat, the one that is more likely to be dominating the narrative or the discussion in 2026, I'd say, is the quantum threat, since it seems to be more uh, imminent.
Yeah, and I wrote about this in my newsletter. Just one more thing. Do you know Luke Grauman? Am I saying that
Yeah.
right? Luke. He you
Roman.
saw did you yeah did you see those posts from his podcast he was on last week where he said that for the first time in his entire time owning Bitcoin, he sold a huge
Yeah.
batch of it, right? And he was like,
Yeah.
yeah, I didn't sell in whatever it was, 15 and 17 and 21, didn't sell, but I'm selling now. And the reason is um, all these OG whales selling, plus the coincidence of quantum being a potential real threat, plus I guess unspoken is the fact that the devs aren't really, or a lot of these developers are not taking it seriously. He was like, yeah, I had to de-risk, So there you go.
Yeah. Well, I think there's more to it than just that with Luke Groman. Obviously, his Bitcoin position has done very well, and it just makes sense. Like many people who have held Bitcoin for a long time, close to a decade or more, it starts to become a much larger percentage of their portfolio. It just makes sense to sell, and I think that's only natural.
Yeah, but still,
And
the
he may post justifying the reasons, but I do think it's just like structurally you kind of have to after a certain point.
I mean, I guess any sane person would have sold 5 or 6 years ago, right? Like, anyway, so
Yeah. Well, all right. Let's get on. Let's move on to the next story. So a
okay,
little bit
yeah,
away from pure Bitcoin
very
into
far away,
the
very far
crypto
away.
realm. So
Yeah,
Coinbase. Go ahead, David.
right. Coinbase had had like some kind of it was almost, did you see it? I don't know if you saw it. It felt like an Apple event, like they're doing this kind of like
Yeah.
Apple style event. Um,
Yep.
but and also like these Apple events, I think the was like the things that they announced were huge, right? So Coinbase is positioning itself as in their they say quote an everything app. Um, I
Everything
think everyone
exchange. Yeah.
everything exchange. I take this to mean to be a super app, right? Like that's really what they're going for. Same as like Robinhood,
Yeah.
maybe even X, right? So they're launching stock and ETF trading, prediction markets, um, expanding futures directly within their consumer app, allowing users to manage traditional and digital assets together, all using USD or USDC. So kind of a unified experience. The stock trading is going to have zero commission trades like Charles Schwab or Robinhood, um, and extended execution. So 24 hours a day, 5 days a week. Pretty big addition, I think. Um, they plan to add thousands of equities, and the prediction markets, at least initially, are going to be powered by Kalshi. That initially part is interesting to me because it kind of hints that they might be rolling out their own at some point in the future. Um, Beyond the trading, they outlined a roadmap that includes lots of kind of, I would say, B2B kind of things like institutional tokenization platforms, real world assets, perpetuals, expanded Solana DEX access, and releasing the base app globally. So it was a pretty action packed kind of presentation. And I think this kind of thing will have um, long-term ramifications for crypto native crypto natives like myself and yourself, because a couple people made this point out. If you can if you can get access to uh, stocks, right, equities and ETFs directly within your crypto app, why would you trade meme coins ever again, right? Why not trade meme stocks with higher liquidity, like the highest liquidity in the world? Or a lot of these altcoins that's in like kind of the insular crypto sphere. If all of these apps are kind of going this direction, which you see with like Hyperliquid, but then things like Coinbase, I imagine Kraken and all of these exchanges are going to start to do the same. Boy, it really does just kind of, I think, crush this whole area of the crypto market.
Yeah, I could see that argument, but you could also see it the other way around. Like, okay, you've got access to stocks in your crypto app, so you then rotate. Stocks start not doing great. You rotate into some new meta that's arising in the crypto space, whether it's meme coins or like I don't know AI agents or whatever happens to be trending, and so it just makes it that much easier to move back and forth between the two. So I don't think that's really a strong argument for like
You know,
why crypto would be dead or why
I
crypto
well no,
trading would be less attractive.
No, no, no. So crypto trading won't be dead. It's specifically targeted at like these kind of meme coin tier, low liquidity
Yeah. Well,
instruments.
I mean, yeah, like one of the biggest narratives recently, right, is that yeah, people have moved on to trading stonks because they're just better performing. But that could easily switch back to crypto once who knows what um, new tokens have a stronger correlation between like the token and like there's new tokens become like equity, and they just are more democratized. Like you could easily see that like that trend heating up and gains being more attractive there, and everyone's switching back to trading crypto assets.
Well, again, this is not talking about all crypto assets. This is talking very specifically about worthless crypto assets that have just been spun up.
Okay, yeah.
So
Well,
it's not talking about like a
good riddance to them.
okay.
And
And again, maybe you're right, but I do think though, like, again, not to get too much on a tangent, the this kind of crypto is dead article came out,
yeah,
which basically the thesis is crypto is now mainstream enough where it's going to be incorporated in everything. One of the secondary effects of that is crypto now has to compete with everything from Web 2 on like a level playing
yeah,
field. And crypto native projects and protocols are actually kind of bad because it's such an insular community and they haven't really had to fight tooth and nail in that kind of just like ruthless Web 2 arena. And
yeah,
so it'll be interesting to see what happens. So this kind of reminds me of that, which is like if now that meme coins have to compete with like these deep liquid, the deep liquidity of all these equity assets, and like you can trade them 24 hours a day, 5 days a week. It's starting to make it feel like, well, what really is the why would you
yeah.
trade meme coins? Why would you trade meme coins then? Like,
One of their big
what's the reason?
advantages in the past was that yeah, 24/7, 365, and yeah, you've kind of eliminated that now.
Yeah.
So anyway, moving on. One of the in Coinbase Palooza or whatever it was, one of the announcements that they made was that yeah, they're going to be launching prediction markets, and at the same time, pretty much they went on the offensive. Their legal team to basically sue three states: Illinois, Michigan, and Connecticut, over those states' efforts to block or restrict prediction markets and by using state gambling laws. So Coinbase is arguing that prediction markets fall under federal jurisdiction via the Commodity Exchange Act and should be regulated exclusively by the CFTC, not by state gambling authorities. Meanwhile, the states, of course, are claiming that these sports related events contracts. Yeah, they are illegal gambling unless the operators obtain state gambling licenses, which of course they don't have. And so that's what this lawsuit's all about. They're basically trying to, yeah, like get the states out of their business, make the CFTC the one in charge, and if successful, the case could set a major precedent. So sort of enshrining prediction markets as federally regulated financial instruments that aren't subject to what the states say about local gambling. Meanwhile,
Sorry, do you have any thoughts on
DraftKings,
that?
yeah,
Do you have any thoughts on that? Any feelings of how you would like that to go?
I think I think this is going to sound statist.
Let's
I
do
think
it.
states should have the ability to like have gambling laws that are enforceable.
Yeah.
Obviously, these prediction markets, sports betting things are gambling,
Yes,
even though
obviously. They're
even
absolutely
though
gambling.
they're like yeah. So you know, like I think it's fair enough for a state, a country, to have control over its gambling laws. But
Yeah.
whatever, that's all.
Yeah, no, I hear you. I I understand what Coinbase is doing, and I guess Polymarket and Kalshi. It just seems kind of like what are you doing though, right? Like everybody knows this is gambling, so I don't know. It's a weird thing. Anyway,
Yeah. Um, and on the other end of the spectrum, so DraftKings, the one of the biggest gambling platforms in the U.S., perhaps the world, is going the other way and launching a prediction market. So they basically, if you can't beat them, join them, I guess, is the idea here. So maybe I don't know, or so they're just hedging their bets. Either way, that they're going to keep being a prominent gambling platform, whether
yeah.
it's allowed as a prediction market or they maintain their a first mover advantage and a regulatory moat that they have with all the states for their
Yeah.
like traditional gambling.
So,
So I guess smart move from DraftKings. What else can
yeah,
you do?
two thoughts on this. Number one, again, we I just mentioned the crypto is dead thing, and how crypto protocols projects are going to have to fight with Web 2, right? Like killers. Here's an example of it, right? DraftKings is entering the market, and so um, Polymarket and Kalshi are going to have to fight with DraftKings. I think they'll probably do really well because it feels like DraftKings is just like kind of bolting on a prediction market. But the second thing that I just thought of though is the argument you often hear about having about each individual state having different gambling laws is this actually favors moneyed incumbents because they
Yeah,
have the
that's
the
true.
money and the resources and the legal the vast legal teams to get in every individual state and kind
Which
of
which is not beneficial to the consumer of the
yeah,
gambling product. So you end
exactly.
up with less advantageous terms, like more money for the house or whatever,
Yeah.
because of that, because there's less competition. So yeah, I get that. That's a good argument for why you should make it simple. I guess from a like at least in the U.S. have one regulator, like be the CFTC or something.
Yeah.
I don't know, but
But I agree with you though. Honestly, I do feel like the states should have some say in this, and like the way a state like New York, the constituents in New York think about gambling is going to be very different from the way people in Texas, I imagine, might think about gambling, or or California, or
yeah,
whatever,
or
this
Nevada.
kind of thing. Yeah, right. Obviously, yeah. There you go, Nevada.
All right,
Okay,
let's move on.
so the next one we're going to talk about stablecoins here now. The first is a story about the Genius Act. As everybody knows, the Genius Act was passed this year, and the bank lobbyists were able to put in a provision that said um, these stablecoin issuers weren't able to um, pass along the yield from the stablecoins to the token holders, right? However, of course, like within days, these issuers found loopholes or ways around this, as I predicted, right? Like, there's no way that this is not going to happen. Then, of course, the bank lobbyists and all these institutions have now attacked these loopholes, saying, "Hey, this is not cool. The Genius Act needs to kind of be modified, or the scope needs to be reinterpreted so that these loopholes get closed." Well, this brings us to our story. More than 125 crypto and fintech organizations are now urging Congress to uphold the original interpretation of the Genius Act and preserve the stablecoin issuers' ability to give rewards. This is another way of saying yield, right? The group emphasized that Congress intentionally banned this direct yield, but it allowed for things like um, offering incentives like rewards.
Yeah. And I mean, one of the points noted by the this coalition of crypto industries is they point out that banks do routinely offer rewards like credit card rewards, loyalty points. Meanwhile, what they're doing there is they're actually engaging in higher risk lending, while meanwhile, like stablecoin rewards operate at the application layer without actual balance sheet risk. So yeah, the crypto industry supporters are pointing this out and saying like you guys are being a bit hypocritical here.
Yeah, exactly. Also, uh, it would be, even if the here's my take on this though, even if Congress does take the bank lobbyist side and they kind of reinterpret this, the stablecoin issuers are still going to find another way to offer whatever they're going to call it. I don't know, points or whatever it is.
Yeah,
So
that's it. Several people have pointed out that even if you like, there's no way to close this loophole. You'd have to like change the constitution or something. Like, or I
yeah,
don't
exactly.
know.
Nice.
All right, let's move on to our last story of the week, which is Ripple. So RLUSD, according to Ripple, is now a top five US dollar stablecoin by market cap. And that, according to Ripple, is something that has happened in just 1 year since launch. The TVL, the total value locked or the market cap of the RLUSD stablecoin, is now exceeds $1 billion. So, by the way, RLUSD is positioned as an enterprise grade, compliance first stablecoin backed by conditional approval of a national trust bank charter from the OCC alongside an existing NYDFS license area. So, at Ripple, they are actually getting it seems like they're actually going to be getting a bank. So, that's part of the bull case for this coin, I guess. But
But
David, as you pointed out, go ahead.
yeah, well, yo, okay, yeah, you have the chart up, so please
Yeah,
continue.
as you pointed out, we're not like if you look at the aggregators of stable coins, like the charts. I'm looking at DeFi Llama right now. Yeah, Tether and USD dominating the charts, 186 and 77 billion respectively. According to DeFi Llama, Ripple's number 10 at 1.35 billion. And so David, we were in the pre-show, we were just trying to figure out how they calculated themselves as number five. I guess you could remove Athena's stablecoin USDE because
Yeah,
it's more of a yield instrument.
it's like a basis. Yeah,
Perhaps,
like it uses
yeah,
like a basis trade basically.
perhaps the same for some of these other coins like Sky Dollar, which is the reincarnation of Maker's stablecoin, I believe.
Yeah, so
And
DAI and USDS can be removed, maybe because it's like got a mixed composition.
I guess, yeah. But anyway, so and World Liberty Financials coin. I'm not sure why you'd remove that. Anyway, okay. So
So
Ripple,
yeah, marketing magic, Graham. You should be taking notes. I think
yeah,
how to do this,
um,
but
yeah.
whatever. Fine.
It's definitely grown. It's definitely
It's
grown.
grown.
Okay,
Yeah,
maybe it's not
it's grown.
five top five, but it's risen. They're doing well. They've got the bank charter. Ripple is doing well. So
Yeah. Um, and as we talked
crypto
about
Twitter
in
can hate
oh
it all they
yeah,
want.
yeah, yeah, yeah. That's right. That's right. So good on them.
All right. I think that wraps it up for us, David. This will be our last weekly. We're taking a week off from the weekly to celebrate the coming of the Lord.
Holidays. Yes. Happy holidays,
Christmas.
Graham. Happy
Yes.
holidays. That's, love it.
So yeah, we'll be back in 2 weeks for the next episode of the weekly. Watch out for our token narratives yearly recap mini episodes that we're going to be publishing over the holidays, where we
It's gonna be
go
awesome.
through the top five on a range of categories, top five biggest narratives of the year, top 5 KOLs of the year. Spoiler alert: neither you or I, David, are included in that list.
Yeah, I
Surprisingly.
mean, we were honorable mentions, of course, but just, got to be
All right.
gracious. Got to be gracious about this.
Yeah, that's right. Okay. Thanks everyone. Have a great week. See you soon.